Okay, so what we've got here is we've got a cash flow statement, or what we're going to do is we're going to do create a cash flow statement. What I've got here is I've got an income statement and I've got a statement of financial position or a balance sheet. And we're doing this for Pacific Limited. Now, we've got a number of items, and some of them will be cash items, some will be non-cash items, so we want to try and distinguish that. For example, we've sort of left out here that we've got depreciation. Now, depreciation expense is non-cash. Okay, so I'll just do that one for you straight away. So we know we've got some bits of information there. We've got sales from revenue, which is not necessarily fully cash. There could be credit sales in there. My cost of sales doesn't mean that that's my payments. So what we're aiming to do is we're aiming to pull out of all here the cash movements through all these accounts. I've got assets, I've got liabilities, and I've got equity. And I've got additional information down here. Now let's have a read of that additional information. In 2013, Pacific Limited declared and paid a cash dividend of $32,000. Notes were issued for a face value of $90,000 in cash. These are long-term sources of borrowing. Equipment costing $180,000 was purchased for cash. So it's telling me a lot of stuff here. Equipment costing $20,000 was sold for $17,000 cash. When the carrying amount was $18,000, and we had ordinary shares of $100,000 were issued to acquire land. The vendor of the land received the payment shares as payment for land. So is this a cash transaction? No, it's not. So this item here is a non-cash transaction. I'll just put a little NC next to that to tell me it's non-cash. What we've done is we've swapped shares for land. So there's no cash involvement. There is a transaction, but it's not a cash transaction. And it says here number A is prepare a statement of cash flows as of the 30th of June using the direct method. Now we're going to focus on the direct method because that's the method we use in the exam. We may take a look at the indirect method, but yeah. Now what my aim is, we've got to rebuild our accounts. So that's the aim, rebuild these accounts. And I'm just going to slide that over there a little bit. So what I want to do is I want to find what the cash movement is through my accounts receivable. I want to find out, there's no cash movement through my inventory, my cash movement happens through my accounts payable, and then I'm going to start doing things like my prepaid expenses and my accrued expenses by taking information from here and finding out what the cash movement is. Everyone ready for me to go? Alright. Okay, so what we want to do is we want to reconstruct my accounts receivable. So we know what my cash movement is. I started with $159,000 and I finished with $191,000. Now we should be able to verify that through our cash flow statement. So we're looking for where is the movement from here to here, how does it all play out in my accounts. First thing we wanted to do is we wanted to look at my accounts receivable. Now my opening balance is $15,000 and my closing balance is $12,000. So I'm going to put that into my account straight away. Now I know it's an asset, so it's a debit balance, so my opening balance is $15,000. And I'm just going to put an opening there. And then I've got a closing as well, which was, what was it? $12,000. Now I'll tick those two pieces of information as being processed. Now what goes through my accounts receivable? What goes through accounts receivable? Sales. Okay, so now I'm looking for sales. So I've got my revenue from sales. Now revenue from sales will increase my accounts receivable. So what I've got is I've got $975 here, and that's my sales. Now the only other thing that goes through my accounts receivable is my cash collected. So what I'm looking to do is I'm looking to work out what my cash collected is. So what I'm going to do is I'm going to close my accounts to find my cash collected. So I'm adding these two together. What have I got? $89.90. And to close my accounts, I've got $9.90 over here. So my cash sales, or cash collected, will be 990 minus 12, which is 88, 78, 978. And what I'm going to do is I'm going to highlight that amount because that's the amount I need in my cash flow statement later on. Is orange readable? Can use yellow. Now my next step is to calculate my cash payments to my supplier. So this is a step in my cash flow statement. I've got cash receipts from customers, cash payments to my suppliers. And I'm going to do that by reconstructing my inventory account and then my accounts payable. So firstly I want to reconstruct my inventory. I go over here and I notice that my inventory account has an opening balance of 160 and a closing balance of 130. So I'm going to put those numbers in. Opening balance 160. That's my opening. And my closing was 130. Now what goes through my inventory account? Cost of sales goes through my inventory account. Now my cost of sales actually reduces my inventory, so I've got my cost of sales figure here. I've actually, just wait a minute, I forgot to tick off my revenue. So my cost of sales actually reduces my inventory, and then we're going to work out what my purchases were. So cost of sales is 660. I'll just tick that one off. So that gives me, what's that, 690, 790 as my ledger total. If I've got 790 here, I can then work out what my purchases were. And my purchases must have been 630. Now, there's no cash movement there. What I'm doing is I'm calculating this purchases figure so I can use it in my accounts payable, so in my next transaction. Okay, so now I'm going to try and reconstruct my accounts payable. All in the steps of the process to be able to work out what was my cash paid, because that's what I'm looking for, cash payments to my suppliers. Okay, so I've got my accounts payable. My accounts payable is a liability account. There it is there. My opening balance was 60,000, my closing balance was 52. Now, because it's a liability account, I know my 60,000 is a credit opening balance. And I put in a 60. And my closing balance was 52. So I can tick those two off, I can tick those two off. We'll eventually have ticks on all of these. Okay, so now what goes through is my purchases. So if I've got purchases of 630 here, that's going to increase my accounts payable because that's the way it works. So I'm going to put that purchases figure into my accounts payable of 630,000. That gives me 690 here. So that means my closing or my account balance must have been 690. And then this is cash paid. Is the only way I can reduce my accounts payable to a balance of 52. So if I had a movement in of 690, my balance at the end is 52. That must mean my cash paid was 638. Is that right? It's Monday morning and my brain's working, I hope. So I'm just going to highlight that because that's going to go into my cash flow statement as well, because we're looking for our cash transactions. Alright, everyone okay to this point?